Welcome back to the deep dive. You're here because you want the real insights. Fast, no fluff.
That's the goal. Straight to what matters.
And today we're tackling something pretty huge in the financial world, the increasing financial power of women. It's more than just numbers. It's really changing the game for financial services.
It definitely is. And it probably affects how you, our listener, think about your own money, too.
So to dig into this, we're leaning heavily on a major McKinsey report. What's it called again?
It's titled The New Face of Wealth, The Rise of the Female Investor. And it's pretty comprehensive. They surveyed over 13,000 investors across the U.S. and Europe. So solid data.
13,000, okay. And our mission here?
Basically to pull out the core findings, what's fueling this rise in women's wealth and how the financial industry is adapting, or maybe how it should be adapting.
Right. Let's jump in then. The scale, it's pretty striking. Right now, May 2025, women control about a third of retail financial assets in the EU and US.
A third already. That's significant.
But the growth projection is where it gets really interesting. They're saying that could climb to 40, maybe 45% by 2030.
Yeah, that trajectory tells a story. It signals real acceleration.
How does that compare to overall wealth growth?
Well, look at 2018 to 2023. Global financial wealth grew, 43%? Healthy, right? But well controlled by women. That jumped 51%. Faster growth.
51%? Wow. So what does that mean in, dollar terms or euro terms?
By 2023, we're talking an estimated $60 trillion in assets under management held by women globally. It's about 34% of the worldwide total. It's not just creeping up, it's a real shift in capital control.
And we're seeing this regionally, too, not just globally.
Absolutely. In Europe, women's assets went from $4.6 trillion in 2018 up to $6.6 trillion in 2023. And they project that could hit $11.4 trillion by 2030.
And the U.S.? Similar story.
Even more pronounced, actually. From $10 trillion in 2018 to $18 trillion in 2023, the projection for 2030. Maybe $34 trillion.
Okay, huge numbers. But you mentioned something else interesting before we started, this idea of unmanaged assets.
Ah, yes. This is really key. Women currently hold a higher percentage of their assets unmanaged compared to men. The report says 53% for women versus 45% for men.
53%. Why is that gap so important?
Well, think about it. If the financial industry could help close that gap, actually manage those assets effectively,
right,
that represents a potential $10 trillion opportunity by 2030.
$10 trillion? That's massive.
It really makes you think, doesn't it? Are the current services just not clicking? Are women feeling, underserved? That unmanaged pool points to a big disconnect.
So what's behind this surge? What are the drivers? The report must break that down.
It does. It points to several things working together. First off, social trends.
Okay. Like what?
Well, marriage rates are declining. Divorce rates are still significant. So you just have more women managing their finances independently.
Makes sense. Single financial households.
Exactly. In Europe, for example, the share of financially independent single women picked up from 27% in 2018 to 29% in 2023. A small shift, but indicative.
And then there are the economic factors, I assume?
For sure. Women's average earnings keep climbing. Better education, more access to high-paying fields. It means they're simply accumulating more wealth on their own.
Right. Earning power is fundamental. What about demographics? I heard baby boomers mentioned.
Yeah, demographics play a big part. Wealth is concentrated among boomers, right?
And
in heterosexual couples, wives are often a bit younger, and women tend to live longer, about 5 years longer on average.
So you combine wealth transfer with longevity.
And you see a rise in affluent widows who are now controlling significant assets solo.
Okay. Social, economic, demographic. What about attitudes? Just how women feel about managing money.
That's the final piece, and it's a big one. There's been a real cultural shift. Women's confidence in handling finances has jumped dramatically.
Really? How much?
In Europe, the percentage of women feeling comfortable making financial decisions went from 45% in 2018 to 67% in 2023.
Wow, that's a huge leap in just 5 years.
It is. And apparently, millennial women were a big part of that surge. In the U.S., similar trend confidence among women under 50 climbed significantly too, from 48% to 61%.
So more control, more confidence. How does that change how they act as investors? Are their preferences, noticeably different from men's?
It seems so. That confidence seems linked to being more price aware. The gap in price sensitivity between men and women actually narrowed quite a bit.
Meaning women are looking harder at fees and value?
Exactly. Becoming more discerning consumers of financial advice. And they seem more willing to walk if they're not happy.
Oh,
Yeah, the report found like 30% of European women are dissatisfied with their current financial services, and 37% are likely to switch banks. Younger women especially seem ready to shop around.
okay. More confident, more demanding. What about how they like to get advice or their goals?
Well, there's a definite preference for in-person advice, particularly among older women.
Why do you think that is?
It could be that desire for personal connection and support,
Yeah,
maybe especially for widows or divorcees navigating things for the first time alone.
that makes sense.
In Europe, that preference for face-to-face actually goes up, with age 35% for 1835s, 41% for 3565s, and 50% for over 65s. And U.S. women over 50 are apparently more willing to pay extra for that personal service.
Interesting. And investment style? Risk tolerance.
Generally, a tendency towards more stable investments. The focus is often on long-term security, not outliving savings, handling healthcare costs, maintaining lifestyle, rather than purely chasing the highest possible return.
So maybe a bit more risk averse on average.
The data suggests that. In 2023, 45% of European women identified as risk-averse, compared to 38% of men. The goals are often about security and stability.
Okay, so women control more wealth, they're more confident, have distinct preferences. It feels like the financial industry should be bending over backward to serve them, but the report suggests maybe not.
Yeah, it seems there's some real hurdles. The industry is perhaps struggling to keep pace.
Like, what are the sticking points?
Well, one big one is diversity within advisor teams, or the lack thereof.
Not enough female advisors.
Pretty much. Women make up only about 23% of advisors in the US and maybe 18–20% in Europe. And there's a growing sense that diverse teams are just better at connecting with and keeping female clients, especially through big life changes.
Yeah, I can see that. Feeling understood during, say, a divorce or bereavement would be crucial. What else?
Another issue is this kind of lingering, maybe unintentional, focus on the man as the primary client in the couple.
Ah, so the advisor builds the relationship with him, but not necessarily her.
Right. And then if there's a death or divorce, that relationship and potentially the assets walk out the door because no real connection was built with her.
A huge missed opportunity. And you mentioned younger women earlier.
Yes, that's another challenge. Engaging younger clients is tough generally, but younger women are often seen as particularly hard to reach.
Why does that matter so much?
Because women often start working with advisors later than men do. The report said 35% of U.S. women only start after age 45 versus 28% of men. So firms miss out on building that trust and relationship early on. Decades of potential business lost.
Okay, so the industry has some work to do. Based on the McKinsey findings, what should wealth managers be doing? What are the strategies?
The report lays out a few clear paths. First, obviously build more diverse teams. Actively recruit, train, and promote female advisors.
Makes sense. What else?
Educate all advisors, men and women, on how to genuinely engage female clients. Move past just talking budgeting. Get into complex investments, estate planning, and crucially, make sure women are equal partners in those conversations.
So less talking at her, more talking with her as an equal.
Precisely. It's about serving the whole household's goals, not just one individual's perceived goals. Building trust is paramount.
The report had an anecdote about that, didn't it?
It did. An advisor who kept both partners as clients through multiple divorces, specifically because they always treated both spouses as fully involved equals from day one.
That says a lot. What about different types of female investors? It can't be one size fits all.
Definitely not. The report stresses using behavioral segmentation. They identified different archetypes. One key group they call young, engaged investors.
Okay, who are they?
Typically 25, 45 years old.
Yeah.
Assets may be 300K, 400K, or the euro equivalent. They're tech-savvy, comfortable with digital platforms, interested in alternatives, maybe consolidating banking and wealth, and, importantly, quite cost-conscious.
So a very different approach needed for them compared to, say, an older widow.
Absolutely. For this younger group, it's about relevant online content, easy-to-use tech, maybe different fee structures. Understanding their values early on is key to building that long-term trust.
It really drives home that nuance is essential. So let's talk about the stakes here. What happens if the industry doesn't adapt effectively?
Well, the numbers are stark. By 2030, remember, women are expected to control an extra $16 trillion in the U.S. and $4.7 trillion in Europe.
Huge potential growth.
But under a business-as-usual scenario, the report estimates over $10 trillion of that combined wealth could just sit there, unmanaged.
$10 trillion left on the table, essentially.
Exactly. A massive missed opportunity for the industry, obviously. But more importantly, It could mean many women aren't optimizing their finances to meet their own long-term goals.
So, wrapping this up, the big takeaway is women aren't just a segment, they're a driving force in wealth, growing fast, increasingly confident with specific needs.
And that pool of unmanaged assets, that's the real aha moment, isn't it? It shows a huge gap, but also a huge opportunity, a potential win-win if the industry can connect effectively.
It really makes you, the listener, think about your own financial interactions, doesn't it? Have you seen these trends play out? Does your advisor, if you have one, seem tuned in to this?
Definitely worth considering.
And here's a final thought to chew on. As women continue to gain financial power and shape the landscape, what fundamental changes might we see? Think about investment strategies, new financial products. Could the very definition of wealth start to shift in the next decade because of this?
It's a fascinating question. What does wealth look like when priorities might be subtly different?
Something to ponder. Thanks for joining us for this deep dive.